please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome. You're watching Power Breakfast on CNBC TV18. I'm Manglam Malu. With me is Ekta Batra. Ekta, earnings heavy day. 16.5% of the Nifty reports its earnings today. HDFC Bank, Infosys, Z, Ambuja Cements and Asian Paints.
We're probably going to see that reaction go into tomorrow's trading session as well, with the likes of Infosys actually coming out post-markets. So we have a lot to work with even post-markets in today's trading session. But these are top stories. US markets lose steam while the dollar edges down from 3-month highs. Asian markets open mixed. In China, all eyes turn to the succession plan for President Xi Jinping as the party congress wraps up.
IT bellwether Infosys reports second quarter earnings today. Dollar revenue growth seen higher by 3.3%. All eyes will be on the new strategy under Nandan Nilekani and commentary on the new CEO hunt. HDFC Bank expected to post yet another steady quarter. Asset quality remains the key factor to watch.
Earnings rush continues on the Lal Street for Asian Paints. Domestic volume growth may be around 7 to 8%. Early Diwali and GST restocking may support revenue growth. Z margins seen improving, driven by cost control and elimination of the sports business, while higher realizations will drive Ambuja Cement numbers today.
Indiabulls Housing Finance posts a strong quarter, logs in its highest ever loan growth at 33.1%. Asset quality improves. Gross non-performing assets come in at the lowest in the last few quarters at 0.78%.
Many of the tweets which border on anger, on even hate mail that I get, I think, what are you doing? So-and-so's coming in a chopper and you are not doing. Why don't you arrest him?
Housing and Urban Development Minister Hardeep Singh Puri, in his first TV interview, says a pragmatic resolution for stuck home buyers is being worked on, even as JP home buyers wait for a breakthrough. The Housing Minister also promises visible results under the Housing for All scheme by 2019, but wants banks to be more flexible if affordable housing is to become a reality.
Right, first up, let's take a look at the Asian markets. Remember, we got a soft lead coming in from the Wall Street, so the Asian markets too are cautious after the US stocks lost steam overnight. GE was the big loser there. The dollar too edged down from 3-month highs, so keep an eye out on the Asian markets. The Japanese Nikkei, that one's absolutely flat, gaining about 0.1%, but mild strength seen in the dollar yen after the fall that we saw yesterday post Shinzo Abe's re-election. So the dollar yen closer to that 113.3 mark. That was as against 113.7 that we saw. The Korean markets absolutely treading on the flat line. Flat line is something that we're seeing across the other Asian markets as well. If you take a look at the Straits as well as the Taiwanese indices, both of them very little change, just about 0.1% on either side. The SGX Nifty though indicates a mildly subdued start for the Lal Street, a cut of close to around 15 points just at the outset. All right, and China may finally get an answer to the big question looming over the Communist Party's biggest political event, which happens twice in a decade. Will President Xi Jinping clearly signal a designated successor? Well, the Chinese Communist Party's 19th Congress officially ends today, with investors assessing President Xi Jinping's ability to amass more power and the leadership's commitment to economic reforms. CNBC's Martin Sung reports.
Right now, the story, succession planning or lack thereof, collective leadership or the risk of one-man rule. And we'll find out tomorrow when the 7-man stride on stage. Indications are right now that Xi Jinping is not going to anoint a successor, is going to stay on not just for a second term, possibly for a third, either as president or possibly in a more a different behind-the-scenes role as the power behind the throne, as it were. The 5 men, the new faces, the replacements on the 7-man Politburo Standing Committee. Let's run through them very quickly. Li Jianshu, Xi Jinping's right-hand man. Han Zheng, the Shanghai party boss. Zhao Leji, tipped to be the new anti-corruption czar. Wang Yang, consider him the economic reformer. And also, finally, Wang Huning, the party theoretician, China's equivalent of, I guess, Steve Bannon. All of these gentlemen are over 60, are too old by party convention to stand or rule for more than 2 5-year terms. So, in essence, no, if these reports are right, by the South China Morning Post and also New York Times, who has not anointed a successor, which raises the risk of increasingly one-man rule here.
Okay, well, that's the update which is coming in from China. But on Wall Street, U.S. markets fell from record levels, weighed down by a sharp fall in the shares of the likes of General Electric, which reported what was a weak set of earnings on Friday. So the Dow snapped its 6-day winning streak, ending 55 points lower. Industrials and telecom stocks dragged the S&P lower, while the tech-heavy Nasdaq also ended in the red. CNBC's Josh Lipton gets us a wrap of all what took place on Wall Street.
U.S. stocks finishing lower on the day, the Dow falling 54 points, the S&P lower by 10, and the Nasdaq down 42. Shares of General Electric getting hammered again today, down more than 6%, its biggest single-day percentage drop in 6 years. The sell-off comes after one analyst warned the company may have to cut its dividend because of weak earnings. GE, the oldest member of the 30 companies that make up the Dow Jones Industrial Average, has had a rough year, with its shares falling nearly 30%. Watch out Etsy. Amazon today introducing the Amazon Handmade Gift Shop right in time for the holiday season. The e-commerce giant promising a selection of thousands of handmade products, including engraved barbecue sets, lotions, teepees, and jewelry. One of America's largest life insurance providers, John Hancock, is partnering with Apple for a program that will offer steep discounts on Apple Watches to new and existing policyholders. The insurer offering its customers a brand new Apple Watch for just $25, over 90% off the starting price of the watch. The catch? Members have to exercise regularly for 2 years or they'll be charged the full price. That's the action from the U.S. market. Now you have a good trading day in India. Back to Mumbai.
Okay, well, meanwhile, staying with the U.S. then, U.S. President Donald Trump said he's very, very close to naming his pick to lead the Fed Reserve. In an interview that aired Sunday, he said Stanford University economist John Taylor, as well as Fed Governor Jerome Powell and current chair Janet Yellen are under consideration for the position. Powell and Taylor are rumored to be the front-runners, while the former would represent continuity. The latter's famous monetary policy rule could mark a meaningful shift in policy from the U.S. Central Bank. An announcement, in fact, is expected before Trump's November 3rd trip to Asia.
All right, and in the European markets, they were mildly green, modest gains as investors shifted focus to corporate earnings. The three major indices ended the day in the green, with the French index actually outperforming a bit. But in Spain, Madrid has urged the Catalans to accept its decision to dismiss their leadership and take control of the region as the nation's biggest political crisis in decades enters a decisive week. So there were those movements that we saw across the periphery as well. The Spanish index was actually underperforming.
In the currency space, the dollar has edged down as investors focused on who would be appointed as the next Fed Reserve chair. However, euro firmed ahead of the European Central Bank's meeting on Thursday.
In the world of commodities, crude oil prices stabilized amid signs of a decline in the U.S. Drilling rates and supply disruptions in Iraq dented exports out of OPEC's second largest producer.
And from precious metals, gold prices rise, recovering from a more than 2-week low hit in the previous session on the back of slightly weaker dollar.
All right, then, let's take a short break, come back and we'll focus on our markets, all the cues and news you need to know for trade this morning.
Welcome back. Well, back home on the Lal Street yesterday, the benchmark indices saw a bout of weakness early in the day but returned to the green in late afternoon trade. So the Sensex finally closed over 100 points higher. Nifty gained around 38 points over the course of the trading session. But how does trade look today? We're all set for a lot of earnings, and not to mention Indiabulls Housing Finance, which is going to be reacting to what is a very steady set of numbers. Anisha joins in to tell us more. Anisha, morning.
Good morning, Ekta. Yes, to begin with yesterday, as you mentioned, the day was very volatile. The Nifty traded in a range of over 100 points. The experts say that it was facing a bit of resistance and it was looking for levers to move on the upside. The Nifty Bank as well was putting pressure on the Nifty for most part of the day, but ended at the high point of the day. Even if you look at the global cues today, they are a bit mixed. Now, the US market closed down anywhere between 0.2 to 0.6%. The Dow snapped 6-day winning streak. And remember, this is the busiest week when it comes to earnings. And also, President Donald Trump said that he's very, very close to making a decision on the next chair of the Federal Reserve. So perhaps the investors are sitting on the sidelines and waiting for these key events to pass on. In terms of the European markets, they also closed a bit higher. The earnings was the major key lever that was moving that markets, and the Catalonian crisis really took a backseat. So earnings is really the key driver even for the Indian markets today. If you look at the Asian screen today, that is a big mix. The last time I checked, Kospi was holding up in the green and so was Nikkei. But on the other hand, the likes of Hang Seng and Shanghai were in the red a bit, and SGX Nifty was also suggesting a 20-point downtick when it opens. In terms of the local cues, as you mentioned, earnings really remains important. There are 5-6 Nifty companies coming out with numbers today, so that will be the key thing to watch. A few numbers from the banking space as well. So Bank Nifty really becomes important today. If you look at the FI net sales figure yesterday, that was around 81 crores on the lower end of what we have seen. So perhaps the experts are saying that maybe this cycle is expected to lower down a bit. Then the DI net buy figure is around 308 crores. In terms of important levels to watch, the experts say that today 10,200 is possible, and on the upside 10,225 and 10,250 are the key levels to watch out for.
All right, Anisha, we'll watch out for those levels, but what are the stocks that we'll be watching out for? A lot of earnings, I reckon.
Well, yes, I'll start with the earnings reaction that is expected to come in today. So Indiabulls Housing Finance, as Ekta was pointing out, came out with a good set of numbers. The asset quality has really been stable. The GNP has come in lowest in the last few quarters at just 0.78%, and the loan growth has been strong at over 33%. The net profit also came ahead of expectations. In terms of the other smaller numbers, Oriental Hotels came out with good set of numbers. The revenue is higher by 10%, and the margins also expanded. On the flip side, we have automotive samplings and assemblies coming out with a weak set of numbers when the revenue fell by around 21%, and the company reported a loss of around 14 crores versus 4 crore last year. JP Associate case, well, this case keeps on just going on, because now we hear that the Supreme Court is going to next year this case on October 26. Remember, the company is trying to hive off the Yamuna Expressway to get around 2,500 odd crores. In terms of other companies, Kaya Limited has approved the investment of around 51 crores in one of its subsidiaries in Singapore. Reliance Communication has also received a final approval from DOT for demerger of the wireless business, so that might be in focus as well. Remember, telecom space has been one space that has been doing well. For Mahindra & Mahindra, a new update coming on the IPO front. They have decided the price band for the logistics business to be between 400. But telecom space has been one space that has been doing well. For Mahindra & Mahindra, a new update coming on the IPO front. They have decided the price band for the logistics business to be between 425 to 429. But really, the key thing to watch out today will be the results, namely HDFC Bank, Infosys, Asian Paints, Z Entertainment, and Ambuja Cements. From the broader markets, we have the like of Canfin Homes, Rallis, ABB India, TTK Prestige, and ICICI Life Group to really watch out for. Back to you.
Okay, all right, Anisha, thanks very much for that. Take a break, but coming up ahead, the Housing and Urban Development Minister Hardeep Singh Puri, in his first TV interview, says a pragmatic resolution for stuck home buyers is being worked on. That exclusive once we're back.
Let's move on to some big voices now. We need to pragmatically tweak insolvency code to protect the interests of home buyers. That's the word coming in from Hardeep Singh Puri, the Urban Development Minister. Speaking to Manisha Natarajan in his first ever interview since taking charge in September this year, Puri spoke about the need to encourage banks for housing credit, also expressed confidence at meeting the housing for all targets by 2022. Here's a slice of that exclusive conversation.
You're looking at a situation in which government will provide the land, Government will also provide an interest, a subsidy to begin with, 1.5 lakhs to 2.5 lakhs depending on the category.
Right.
And then the government will also help you get, loans from the banks at favorable rates. Now, you are picking on one part. It is that the banks, I think you mean the public sector banks, have not been forthcoming and so on. I think there is a bit of a problem there. And I think that's a problem my secretary has addressed with the banking secretary's issue which is coming up. We need to encourage the banking sector that in the case of arrangements for the affordable housing sector, they have to be more forthcoming. But I think it's an issue being addressed. It may be part of a larger issue. There are NPAs, the sector needs cleaning up. And you haven't asked me the question, but I don't want to miss the opportunity of saying what I have to say. Look, after 70 years, the country has got a regulator in the real estate sector. Now, that's actually...
I was going to come to that, Mr. Puri, but there's been a disappointment with the regulator because the stuck projects and home buyers were seriously disappointed. Sentiment's not reviving because of that, and most of the ongoing projects have found a way, or in the current regulations, have found a way to stay away from RERA.
Can I just complete the picture? First, what did we have and what do we have now? You've got RERA in place. All right. You've got a insolvency bill there. You've got industry status to infrastructure, all right? Now you have to comply with the existing law. Now what seems to have happened in this case, is that when some states were complying with RERA, they tweaked the provisions of ongoing projects.
Sure.
Now that has led to problems, but now we are seized of the problem. We are looking at what can be done in terms of RERA. But let me come back to your original question. Will we be able to kickstart, revive, and ensure that we get the Housing for All scheme done by its target date, which is June 2020? I have absolutely no doubt.
If you look at the insolvency code and how it's evolved, sir, there have been several tweaks, and the government has been extremely proactive in making those changes because it's a new code and it needs to work. But in this case, it's taking time. Why?
No, first of all, I don't want to be negotiating with my senior colleague, the finance minister, who also has additional charge of corporate affairs, through a press interview. But so I would just leave the actual stage of the discussion.
But you're hopeful that it will happen and it will happen soon.
No, it has to be done in a pragmatic manner. I think the issue is the government is seized of the matter at every level. And I think what the ultimate test of this process is that the buyers, home buyers, and the affected sectors, home buyers particularly, the ones who are most adversely affected, get relief as we go along. There's no instant magic, but we are at it, and I can tell you, we will do the best we can.
Okay, well, now that the minister's comments on insolvency concerns have come on a day when Jayaprakash's associates told the Supreme Court that it hopes to generate 2,500 crores by hiving off its Yamuna Expressway business, and that it would use this money to compensate home buyers of JP Infratech. However, this has not gone down well with its home buyers, who alleged that this is a devious scheme by the company to shield its assets. The Supreme Court will hear the matter on the 28th of October. Okay, well, moving on from real estate then, the markets will see some corrections going forward, but these will be healthy corrections and there is no need to panic. That's the word coming in from UTI Mutual Fund's MD and CEO Leo Puri. Speaking to CNBC TV18's Lata Venkatesh, Puri added, however, that a recovery in earnings will only take place gradually. Take a look.
We have a very strong macroeconomic foundation, and that the reforms that we've undertaken, despite the initial glitches, are broadly supportive of future GDP growth. I think we made probably a couple of mistakes. One is that we over-communicated how well we were doing when we weren't perhaps doing as well as we thought. And it's not surprising, therefore, that now we sink into pessimism in an extreme pendulum-like fashion as well, although we're not doing as badly as some of the critics would make us believe. We are in the middle of a 3 to 5 year recovery, which began, I would say, maybe a couple of years ago, and it's going to take its time. So the earnings recovery will happen slowly. It's not going to happen in a hurry.
Do you think the domestic investor interest will hold, or do you think this postponement of earnings growth quarter after quarter can disappoint and disturb this trend?
There's room for corrections, and some corrections will be healthy. Some of them will be sector-specific. People will, I think, hold out. I don't see any need to panic at this point, but euphoria also needs to, I would say, evaporate a little bit.
Okay, that's as far as the market's concerned. We take a quick break, come back, focus on the earnings, two big ticket earnings that we'll be watching out for, Infosys as well as HDFC Bank. Stay with us.
Welcome back. Well, if you're a value investor like Kenneth Adrade certainly is, where do you find value in a market which is up 25% this year and at all-time highs? Hear it from the man himself.
In a market like this, where do you find value? You effectively find value where there's no growth. Okay, where the industry is actually beaten up to a level where they earn lower than the cost of capital. These are also times where markets actually consolidate, or industries actually consolidate to two or three businesses in their sectors. That's a happy hunting ground for us. Okay, so low growth businesses
where there's no growth.
There's low growth.
Returns which are lower than the cost of capital.
In some cases, yes.
Okay.
Yeah. So these are two places that we like to go hunting for, and like I said, in the past we've been able to find some of those. Okay, and today if I open the opportunities that are there, we still incrementally are able to find small pockets that are available. Okay, so these are so basically, as an investor, what we essentially look for is low valuations, and these are two places you usually find low valuations, and you find industries which are consolidating, and then you wait for a cyclical recovery in the business. So low valuations essentially means low price earning multiples, and price earning multiples will look upwards if there's earnings growth. So you get an earnings growth momentum, and you get expanding valuations, and that's how we compound. And that's how we compound capital.
All right, need to wait for cyclical recovery in value businesses. That's the word coming in from Kenneth Andrade. But talking about cyclical recovery in value businesses, the tech space, all eyes will be on Infosys reporting its earnings for the first time post-market hours ever. Anisha, take us through a quick review. What are the key things to watch out for?
Well, yes, thank you for that. But more than the numbers this time, I think the street will be watching out of what comes in terms of the management commentary, because remember, this is the first time after Mr. Sikka's exit that the numbers will be announced. This is the first time that the company will be announcing numbers post-market. The street would be watching out of what Mr. Nilekani has laid out in terms of future strategy, what is happening with the top 50 clients in terms of Pinay and other automation, how the business is running smoothly. And of course, the other key thing to watch out would be if there is any word coming in on the hunt for new CEO, if they have finalized on a person, or there are, there's a list of the nominations for that particular thing, so that will be keenly watched out for. And the analysts are also waiting to hear what comes out of the guidance, because remember, the guidance for full year FY18 in constant currency growth is 6.5% to 8.5%. 5 out of 6 brokerages are expecting a cut there. It is expected to come down to 6 to 7% for the entire year. But talking about the numbers now, for this quarter, we are expecting a dollar revenue growth of 3.3%, a rupee revenue growth of around 3.2%. Now, as far as the EBIT margins is concerned, that is expected to come down a bit. We are expecting a number of around 23.6% versus 24.1% that they reported in last quarter. And the reason is because the management had said in quarter 1 that they are going to take the impact of wage hike of around 6 to 10% in quarter 2, and that should come into picture. Yes, there's cross-currency tailwind to mitigate that, but the profit is expected to remain flat around that 3,500 crore mark. A constant currency growth of around 2.2% is what we're expecting. So clearly the key thing to watch out this time will be the commentary coming out on all the sectors like BFS and retail, because that continues to be sluggish as well. Back to you.
Okay, all right, Anisha, and remember that it is the first quarterly results after the return of Nandan Nilekani at the helm. You can catch live coverage of the results fine print here on CNBC TV18 and catch the management Raveen Rao and MD Ranganathan address the press conference later at 4:15 p.m. Today, the results should be out by 3:45 p.m. Okay, well, sticking with earnings, we have Indiabulls Housing Finance, which reported what was a steady and strong quarter with the highest ever loan growth with one of its lowest gross NPAs this quarter. So it seemed as though it's a blue sky scenario for Indiabulls Housing Finance this quarter. Abhishek joins in to give us more details about it. Abhishek, over to you.
Well, Ekta, you have mentioned it correctly. The loan growth at 33.1% is the strongest ever seen from Indiabulls Housing Finance. Now, despite the fact that loan growth was at 33%, the NII growth on a consolidated level was at just 27%. So spreads were capped or spreads were limited. Now, why? Because they have been improving their pure vanilla housing finance share in the overall portfolio. So that portfolio of pure vanilla housing finance has improved to 58% from 57% on a YOY basis. So when you improve the pure vanilla housing finance, your spreads remain intact. They don't improve much and they remain under pressure. However, even at 3.25, it's a steady set of numbers that spreads have been maintained. Gross NPA is the lowest ever in last few quarters at just 0.78. Brokerages across have given a thumbs up to this results, and in fact, Credit Suisse has actually upgraded their target price to 1600 from 1400 earlier. So CLSA, Motilal, Edelweiss all have a buy or outperformance rating, while only Macquarie has an underperformance rating on the stock. Back to you.
All right, Abhishek, that's as far as Indiabulls Housing Finance is concerned. But let's shift focus to the banking space. Big boy, HDFC Bank will be reporting quarterly numbers. Abhishek, steady as ever, is that the expectation?
Steady as ever, and you can expect some positive surprises also. You know, in the last 2 quarters, what HDFC Bank has surprised the street is the loan growth. Now, the loan growth, which 2 quarters back was at 15% or below, has kicked up to 20% and plus. Even in the last quarter, it was at 23.5%. So loan growth above 20% will be very positive. Net interest margin, the last quarter was at 4.4%, which is at multi-quarter high. So anything above 4.2% will be very positive. Low-cost deposit flow should remain strong for the bank, given the fact that the strong low-cost liability franchise has helped in containing the cost of funds. This should again continue in the momentum. Outlook on retail growth will be seen very closely. Now, they have been very aggressive in marketing their products, especially in the retail segment over the last few months. So that needs to be seen very closely. Asset quality saw a slight hiccup in the previous quarter. Now, this quarter we know a few accounts like JSPL, anything can have a minor impact, and also the SME sector, which has come in under pressure after GST, needs to be seen how the asset quality pans out over there. Otherwise, steady set of numbers. Net interest income, according to our poll, is expected to grow at 21%, while net profit to grow at 20%. Back to you.
Okay, all right, Abhishek. Thanks very much for that. And remember, you can catch the management address, the press conference on the bank's Q2 performance at 2:30 p.m. this afternoon, only on CNBC TV18.
All right, let's slip into a short break. Coming up ahead, earnings galore on Reed Street. We will put the spotlight on some other big earnings today, including Asian Paints, Zee Entertainment. Stay tuned. Keep watching Power Breakfast.
Welcome back. Well, earnings heavy day. Asian Paints will also be reporting its Q2 performance today. Mangalam, what can we expect?
Well, for Asian Paints, Ekta, consolidated numbers are what we watch, but the key number will be the standalone domestic paint revenue growth, because that is what will help us in further volumes. We're working with a 7 to 8% growth as far as the domestic paints is concerned, decorative paints. There could be an upside risk to it, given Kansai Nerolac decorative volumes. They grew 20%. Remember, this quarter itself, there is the early Diwali factor, early festive season factor. GST restocking may also give a positive surprise. But then again, remember, if Asian Paints disappoints with these expectations, it will be the 3rd quarter since the company failed to positively surprise the street. As far as numbers are concerned, keep an eye out on the total income. We're expecting a 10.5% growth out there. But this could optically look different because of the GST adjustment. So keep an eye out on that. Margins are expected to be flat around that 16.5%, 16.7% mark. And the net profit, that one's likely to grow by about 5%. So the key number like I said, would be the volume growth. We'll be working with a 7 to 8% volume growth range. The last 3 quarters, they've disappointed a bit. Domestic volume growth, again, like I said, 7 to 8%. Realizations, they'll be important. The company's taken a 5.5–6% price hike. So the realization, including the product mix, should grow by about 4 to 5%. SS and Sleek, which is their home improvement business, that is likely to improve post the aberration that we saw in the first quarter. Keep an eye out on the cost of goods sold. That could remain elevated given the weaker rupee that we saw. Crude prices themselves are up 3% quarter on quarter. So by that measure, the gross margin trend should come up for you. Fairly important. By and large, the numbers are likely to be steady. We'll be watching out for the management commentary on rural recovery and higher growth of the home improvement business itself. The stock not particularly cheap, but we'll keep an eye out on what happens.
Okay, well, that's on Asian Paints, but another consumer story will be Zee Entertainment, which will be reporting its numbers today. Sonal is here to tell us what to expect. Sonal, over to you.
Good morning, Ekta. Well, we are expecting a steady set of numbers. In terms of the 3 major numbers, revenue is expected to decline by around 5%, majorly because we have the sports business in the base. The EBITDA is expected to be flat. However, margins are going to expand to 30.3%, majorly because the sports business will not be accounted for, and all the costs related to that and the losses will be wiped off. In terms of profits, they'll be up around 34%, majorly because there'll be in the other income, there'll be a factor of the sale of the proceeds of the sports business. In terms of internals, ad revenues are expected to grow around 3 to 5%. However, subscription revenues are expected to go down by 9 to 15%, majorly because there'll be no sports business to be accounted for. Apart from that, we also will expect an uptick in the programming costs because the company has increased the programming hours in this quarter. And also going forward, we'll be looking for management's commentary on digital spends and also on the margin guidance. That will be one key thing that we'll be watching for. And yes, we'll see how the stock will react to the earnings today. Back to you.
All right, Sonal, thanks a lot for that. In fact, all my FMCG boys will keep an eye on the ad revenue as well out there, or the ad expense out there, which will be important to track for Zee's ad revenues. But let's move on. Toyota Kirloskar, the Indian subsidiary of the Japanese auto giant Toyota, they've decided to temporarily cut back on the production of its popular sedan, the hybrid Camry, at its Bangalore plant. This comes after the sales of the car plunged over 70% in July to September quarter, due to the cars attracting a GST of 43%. In an exclusive conversation, Kirloskar's Vice Chairman Vikram Kirloskar says that this is not the end of the road for its hybrid platform and that production would restart if orders picked up.
This is not a shutdown of production. This is in Toyota production system, basically when the demand is less than our production volumes, we will stop supplies. We limit the number of stock we carry with ourselves or with the dealers. So after the GST came on, obviously the sales came down, but we are slowly starting to see some revival of sales. And as our stocks deplete, we will restart production. I'm not sure electric is a leapfrog. A hybrid vehicle is far more complex than an electric vehicle. Electric vehicle is very simple, a lot of lithium. That's the only thing. We as a company are convinced that when you have a situation where more than 70% of the electricity made in the country is through coal power, the hybrid vehicle is a better alternative. I don't think we are going to stop it, but definitely we'll relook at how we will remarket it, okay? And again, make a case back to the government on why these should be pushed ahead. I'm going to keep on making that case.
Okay, time for a break now. But up next, we're going to focus on Ambuja Cements and get you the key expectations for its Q3 numbers on the other side.
Welcome back. Let's take a quick look at the Asian markets. In fact, when we opened, it was absolutely flat, but as we speak, some bit of gain seen on the Nikkei moved into the green with a gain of almost 1.15%. The Shanghai also opened with a cut of 0.25%, has moved into the green. The Hang Seng itself is just crossed the green mark. Keep an eye out on the other markets as well. The SGX Nifty, when we started trade, it indicated a cut of close to 15 to 18 points. Right now, that has been narrowed to a cut of just about 7 points, but we'll have to keep an eye out on what takes place out there. A bit of traction seen in the Asian markets. Let's see whether that sustains or not. But talking about traction from the cement pack, Ambuja Cement reports its earnings today. Nigel, Ultratech did perform well. What about Ambuja? What happens there?
You know, Mangalam, if you just take a look at it, both the Ultratech as well as ACC, on the volumes parameter, both of them beat expectations. Right. So that's something that should play out even for Ambuja Cements. Let's run you through the expectations. Remember, this time around, you're looking at the standalone results because the consolidated numbers will also include ACC's numbers. So in terms of the standalone numbers, revenue from operations, that should jump up by close to around 11%. That's really going to be driven by Ambuja Cement's big exposure that they have in West India. Remember, cement prices in West India are up roughly around 8% on a year-on-year basis. So that's something that drives their numbers. And the second factor is they have no exposure to South India. Realizations is what drives bulk of that 11% top line growth. The other part really will come in from strong volumes, but that is going to be on a lower base. So the total sales volumes that's expected to come in higher should be at roughly around 9% approximately. So we're working with a number of around 4.95 million tons. Remember, this is on a low base. Same quarter last year, there was a degrowth of around 6%, and also demand growth in West India is likely to help volumes. In addition to that, they had a small facility that came on stream in West India, and that's what drives a good growth in terms of a top line. Operating profit, well, it's going to be, a fight between higher realizations and higher pet coke prices. So the poll threw up a number of around 360 crores. That's indicating a bit of a margin expansion. But what you need to track really is how much do the realizations really increase, and then you need to compare it with pet coke prices. Because remember, pet coke prices on a year-on-year basis, they have spiked up big time. And my fear is that as of today, pet coke prices are close to around $15 higher than what they were in the past quarter. So just keep that in mind as well. What could be a bit of a spoiler? Well, monsoons, we know that there were heavy rainfalls in West India. That's something could be a bit of a spoiler. And there's sand mining issues as well that could impact the company's profitability. Though you have a growth on the top line, though you have a growth in terms of operating profit, our poll threw up the net profit number coming at around 250 crores. Need to watch out for two factors. One is in the same quarter last year, the taxation rate was lower. So that was only at around 20%. And the second factor was same quarter last year, the other income was at around 220 crores. That included close to around 103 crores in terms of dividend coming from ACC. You'll be expecting the numbers midday today because, they have their meeting that's starting in the first half of trade. So by the midday mark, we should get it. And what my sources tell me is that, in fact, maybe we'll not get that ratio, that ACC Ambuja cement ratio that we've been waiting forward to. We'll be looking out for that as well, but maybe that may not come out today. All in all, expect a good showing coming in from Ambuja Cements.
Okay, all right, Nigel. Thanks very much for that. But let's go across to Manisha now, who joins in with everything that's happening in the commodity and the currency space. Manisha.
Morning, and thank you for that. Well, let's start with crude, where you have seen the prices trade and then above side of the range here. We, of course, saw some profit taking in the New York session yesterday, but that was only just about some profit taking there, because most of the fundamentals are still on the positive side. You have OPEC statements continuing to tell you on how they intend to cut oversupplies into the market coming 2018 as well. You also are looking at the winter demand from the U.S. start from this weekend as well for this quarter also. So whether it's going to be the crude oil or heating oil or the natural gas prices, you can see the demand for that increase, and that would weave its way into the prices. Apart from that, it also is the World Bank report which suggests that the prices would average 25% higher this year as compared to previous year. And that definitely has been a very big positive for the crude oil prices going forward. Most experts will tell you that you can expect a spike in crude oil prices from here on before this calendar year ends. Another sector which continues to do well has been the metal space. So the iron ore prices are trading at a 3-week highs. You have the steel prices as well gradually continuing to climb onto the north. Copper and aluminum are other couple of metals, the non-ferrous space, where you have seen very strong fundamentals continue. One, of course, because of the supply cuts that you will see deeper into China in this quarter. And the other, of course, is because of demand. So whether it's battery, whether it's the electric vehicles or construction or the home sales data in U.S. after the hurricanes, all of that has been very supportive of the base metal prices going up. So almost everything in that space as well in Shanghai and Tokyo has opened in the positive.
All right, Manisha, thanks a lot for that. We'll keep an eye out on the commodities arena, but this is expiry week. Let's watch out for the cues from the futures and options space as well. Now, yesterday's trading session, we were fairly choppy, and the Nifty, if you take a look at the Nifty futures, high as well as low, was trading in a range of almost 105 points. So that was in a sense the kind of range-bound movement that we saw yesterday. In that range itself, the FIIs, they chose to sell in index futures, sold about 660 crores, unwound some long positions, added some short positions as well, and those selling action in index futures was negated by purchase in index options. So what the FIIs did, transferred all their long index futures contracts into long index call contracts. They bought about 22 crores in index options, added close to 14,000 long index calls. There was also some writing on both index calls as well as index puts, which usually happens by the smart money ahead of expiry, trying to look to eat into the premium. The 10,100 put, that one saw writing because we recovered from the low point of the day yesterday. So perhaps the smart money believes that the 10,080 as well as that 10,100 mark could be a bit of a support for a premium of 22 rupees. The premium on the 10,200 straddle, which is one call and one put together, is close to around that 90 rupees mark. Remember, before we went into the Diwali weekend, it was around 130 rupees. 90 rupees is what the smart money is looking to eye. Out of F&O band is Reliance Communications. We'll keep an eye out on that. And the cement space, Shree Cement as well as Ultra Cement, both of them saw some long contracts being added.
Okay, all right, Mangalam. Thanks very much for that. But on our bullseye corner this week, Vishwesh Chauhan, Rakesh Bansal, Ruchit Jain battling it out for the strongest portfolios. So let's listen in to their picks.
My first call is a buy call on Shiva Cement. Buy Shiva Cement. Stop loss 24.90, target 40. My second call is a buy call on Ganesha Benzoplast. Buy Ganesha Benzoplast. Stop loss 95.40, target 120. My third call is a buy call on Jindal Stainless. Buy Jindal Stainless. Stop loss 109.90, target 124. My last call is a buy call on Motherson Sumi. Buy Motherson Sumi. Stop loss 349, target 372.
My first call today is a buy call in Federal Bank with stop loss below 120 for target of 134. My second pick is a buy call in Tourism Finance with stop loss below 142 for target of 165. My third call is a buy call in TFS with stop loss below 39.70 for target of 47. And my last call is a buy call in GSFC with stop loss below 136 for target of 155.
First is a buy on Andhra Sugar with a stop loss of 540 for the target of 599. Second is a buy on Gujarat Alkali with a stop loss of 650 and for the target of 750. Third is a buy on Delta Corp with a stop loss of 230 and for the target of 270. And last is a buy on Coromandalam with a stop loss of 488 and for the target of 540.
All right, those were the picks of our bullseye contestants. But before we wrap up, remember it's an earnings heavy day on Dalal Street. And Infosys, it's the first quarterly results after the return of Nandan Nilekani at the helm as well, as it's the first time the IT bellwether will be reporting its numbers post-market close. Remember, you can catch live coverage of the results fine print right here on CNBC TV18.